Stop doing this if you want to build wealth. Most people don't lose money in the stock market because they're unlucky. They lose money because they make predictable mistakes. Small mistakes. Simple mistakes. But mistakes that compound over time and cost them years of progress. And here's the truth. Almost every beginner makes the exact same mistakes, which means if you can recognize them early, you can avoid them completely. In this video, I'm going to break down 15 investing mistakes beginners make, and more importantly, how you can avoid them. Let's get into it. Mistake number 1, investing without a plan. This is where almost everyone starts. They hear about investing. They see people making money, so they jump in. But they don't have a clear reason. They don't know their timeline. They don't know their strategy. And because of that, every decision becomes reactive. They buy when they feel confident. They sell when they feel nervous. Do not make investing and trading decisions based on feelings. There's no structure, no direction. Imagine trying to drive somewhere without knowing the destination. That's what investing without a plan looks like. Smart investors do the opposite. They start with clarity. They decide, why am I investing? Are the odds in my favor? Is this for retirement? Short-term growth? Financial independence? Then they choose a strategy that matches that goal. And once they have that plan, they stick to it. Mistake number 2, trying to get rich quickly. This one destroys more portfolios than almost anything else, because it feels exciting. You see someone double their money. You hear about a stock skyrocketing, and you think you can do the same. So you chase. You take bigger risks. You look for shortcuts. But shortcuts in investing almost always lead to losses, because the faster you try to grow your money, the more risk you take. And most beginners don't understand that risk. Wealth isn't built in days or weeks. It's built slowly, consistently, over the months and years. The people who try to rush the process usually end up starting over. Mistake number 3, not starting early enough. Time is the most valuable asset in investing. More than money, more than knowledge, because of compounding. When you invest, your money grows. Then that growth starts growing. And over time, the effect becomes exponential. But here's the problem. Most people delay. They wait until they feel ready. They wait until they have more money. They wait for the right time, and every year they wait. They lose that compounding advantage. Even small amounts invested early can outperform larger amounts invested later. That's why starting now, even imperfectly, is so important. Mistake number 4, trying to time the market. This is one of the most common and most damaging mistakes. People believe they can predict when the market will go up or down, so they wait. They try to buy at the bottom, sell at the top. But even professionals can't do this consistently. Markets are unpredictable, and trying to time them usually leads to missed opportunities. Smart investors don't focus on timing. They focus on consistency. They invest regularly. They stay in the market. And over time, that consistency wins. Mistake number 5, letting emotions control decisions. This is where logic disappears. When the market drops, fear takes over. People panic. They sell at a loss. When the market rises, excitement takes over. People chase. They buy too late. This emotional cycle repeats over and over, and it leads to poor results. Smart investors control their emotions. They expect volatility. They stay calm during downturns, and they don't get caught up in hype. Because emotional investing almost always leads to mistakes. Mistake number 6, not diversifying. You don't have to overdo it, but some diversification is good. Putting all your money into one investment might seem like a way to get rich faster, but it also dramatically increases your risk. If that investment fails, you lose everything. Diversification spreads your risk. It protects your portfolio, and it creates stability. Smart investors don't rely on one outcome. They build systems that can survive different scenarios. Mistake number 7, following hype and trends. By the time you hear about an amazing opportunity, it's usually already happened. The price has already gone up. The excitement is already high, and the risk is already elevated. Beginners get pulled into this cycle. They buy late, many times near the top. They sell when things drop, and they lose money. Smart investors avoid hype. They focus on value. They make decisions based on logic, not popularity. Mistake number 8, ignoring fees. Fees seem small, but they compound over time, just like your investments. And that means they reduce your returns. A small percentage difference can cost you thousands over the long term. Smart investors pay attention to fees because they understand that every dollar matters. Mistake number 9, not reinvesting profits. This is how you unlock compounding. If you take profits out, growth slows down. If you reinvest them, growth accelerates. Your money starts working harder. Over time, this creates massive differences. Reinvesting is one of the simplest and most powerful things you can do. Mistake number 10, overtrading. Beginners often think that more activity equals better results. But more trading usually means more mistakes, more fees, more emotional decisions. Smart investors don't constantly trade. They make decisions carefully. They follow a proven plan, and they let their investments grow. Sometimes doing nothing is the best move. Mistake number 11, not having an emergency fund. This mistake forces bad decisions. If you don't have cash available, any unexpected expense becomes a problem. And that problem often leads to selling investments at the worst time. Smart investors protect themselves. They build a safety net first, so they're never forced into bad decisions. Mistake number 12, comparing yourself to others. This leads to pressure, impatience, and bad decisions. Everyone is at a different stage, different income, different goals, different timeline. Smart investors focus on their own path. They keep improving. Because comparison doesn't build wealth, consistency does. Mistake number 13, not continuing to learn. Markets evolve. Opportunities change. And if you don't improve, you fall behind. Smart investors keep learning. Read books and watch videos of successful investors and traders. They stay informed. They adapt. Because small improvements over time lead to better results. Mistake number 14, expecting perfection. You will make mistakes. The key is to keep mistakes small and learn from them. You will have losses. Keep your losses small and manageable. That's part of investing. The goal isn't perfection. It's progress. Learning, improving, moving forward. Smart investors accept this and keep going. Mistake number 15, not taking action. This is the biggest mistake of all, because none of the others matter if you never start. Most people stay stuck in preparation. They wait for confidence. They wait for certainty. But confidence comes from action. The longer you wait, the more you lose. If you avoid these 15 mistakes, you put yourself ahead of most investors. And over time, that's how wealth is built. Thank you for watching. If you are serious about building wealth, subscribe to the channel.